Hello, I'm Ted Seides, and this is Investment Management Operations. This show explores the inner workings of the most sophisticated institutions in the industry. Through conversations with executives across operations, compliance, legal, and finance, you'll hear how key operating partners run their businesses in an ever-changing and complex investment landscape. You can join our mailing list and access Capital Allocators content at capitalallocators.com.
I'm Scott McDonald, and I'm your host. This sponsored insight highlights Nasdaq's Solovis, a multi-asset class portfolio data and risk management system for asset owners. We spoke with Jeff Manning of Verger Capital Management, a $2.8 billion OCIO that was created out of the Wake Forest University Office of Investments. Verger CIO Jim Dunn was an early guest on Capital Allocators, and that conversation is replayed in the feed. Jeff oversees all financial operations at Verger, including the team, reporting, and strategic decisions. He provides a detailed case study on how Verger enhanced its operational capabilities as it scaled and how a partnership with Solovis helped drive efficiency. We are grateful for Nasdaq Solovis' sponsorship of investment management operations and are eager to highlight their contributions to the asset owner community. And with that, please enjoy my conversation with Jeff Manning. Well, Jeff, thanks for joining me today. I'm excited to get into all things related to you, your role, the operations of Verger, and some specifics on Solovis. I guess to start, why don't you share a bit more about the organization of Verger?
Verger was founded in 2014. We were spun out of the Wake Forest University Office of Investments to serve the needs of nonprofits and foundations outside of the university. And we are proud to be celebrating 10 years. And so this 10-year journey has been fun. It's been interesting, and we've certainly learned a lot along the way. I also want to point out our CEO, Jim Dunn, has been part of the Capital Allocators podcast in the past. And all the way back to 2017, he spoke about our investment philosophy around protect, perform, provide. From a company standpoint, we're an outsourced chief investment officer solution. Today, we have $2.7 billion of AUM, and that is split between three pots or segments of how we view these assets that we manage. And the largest is Verger Capital Fund. And this is just slightly under 90% of the AUM that we manage today, which is a commingled fund master feeder structure where we invest across just about all asset classes, from private equity to venture capital, as well as hedge funds, sub-advised accounts. So a little bit of everything. And we're doing this with the investment philosophy of protect, perform, provide. What we're doing is we're creating what we think is an all-weather portfolio, anti-fragile, that we're looking to hire the best managers across the world to help service these nonprofit investors that we have. The second bucket I'll mention is separately managed accounts that are designed for each individual investor based on their individual needs. And so this can be based on days cash on hand to meet debt covenants, or this can be, we want to maintain some more liquid option in conjunction with our Verger Capital Fund investment as well. And so these are highly liquid securities, typically ETFs, that we manage specific to an individual client's need. The third bucket we have is what we call legacy assets. And these are just left behind assets that a investor cannot liquidate because they're in private equity, for instance, and we're just helping to report on these assets until they can be liquidated. So this is less than 1% of our current AUM today. The select group of clients that we work with, their individual selection across Verger Capital Fund, the separately managed accounts or legacy is really dependent upon their needs or their situation in terms of where they are in their portfolio's life cycle.
And tell us about how the organization is structured.
From an organizational standpoint, we like to have a very client service focused model in terms of helping our investors, not only with their investments, but also think outside the box with some issues that may be affecting them and getting them in touch with some experts that we may have access to. We've really built what we consider to be a flat organization. So it really gives employees within the firm an opportunity to have a voice at the table for big decisions. And certainly in our first 10 years, there's been a lot of big decisions in building out the firm. And we feel it's really important to give those individual members a voice at the table. And this has helped create a culture which we think is unique. And we've heard from employees that have joined since our launch that they're really drawn to our culture. And we think that culture has grown because the majority of our founders are still here today, servicing the nonprofits that we're involved with, and has created this element of trust amongst the team as well as a collaborative nature, in trusting that all teammates are going to act in the best interest of Verger and of the team and of our clients.
Tell us a little bit more about the team and your background. How did you end up as a CFO?
A lot of our current employees have worked in endowment offices, whether it's been on the investment team or more on the finance accounting side of things. So we feel that this gives us an advantage in understanding what our clients are going through from an endowment standpoint. We have individuals from Wake Forest University, Cornell, as well as Northwestern on our team. And bringing this unique experience that they have from each institution that they served has helped us build what we think is a pretty strong team and a pretty strong group of individuals to help us today as well as move forward. From a personal standpoint, I started my career at KPMG as an auditor for a few years and then worked with Wake Forest in their accounting and finance department. And those 5 to 6 years I spent at Wake, I was working closely with the Wake Forest investment office, which then became Verger, and really saw this great opportunity to join a growing opportunity that isn't always there for an accounting and finance role. I mean, typically accounting and finance, not a whole lot of decision making. Let's just keep this thing rolling. And if we're going to make a change, we're going to talk about it a lot and may not make it. But with the new company, we had this opportunity to really join this group of entrepreneurs and do something special in the investment management realm. And so I think seeing this mission-driven organization and seeing the roles that needed to be built out, making the transition was very easy.
And what are your responsibilities as CFO?
In leading our operations team here, certainly it encompasses your typical finance roles of audit, tax, reporting, working with our board of managers, as well as setting the culture and tone as part of our leadership team. And so I think one thing that within our operations team that we focus on is being efficient in everything we can do. And part of that is partnering with good, strong partners outside of the firm. Our operations team is only 4 individuals. And of those 4, I would say 2.5 of those positions are really focused on the reporting as well as performance associated with our portfolios. The other 1.5 positions are more management company related operations and coordinating amongst the firm on other things outside of just pure performance and accounting. And I mentioned having these great partners as an extension of our team. And I think that's allowed us to maintain our efficiency as well as being effective for a fairly small team. And so certainly we have good relationships with our administrator and custodian, as well as audit, tax, legal partners. They're all helping us along the way. But I think really some of the tools that we have in place, in particular Solovis, has allowed us to maintain efficiency as well as lower headcount as we rely on them to provide some services that otherwise we'd be hiring a person to fulfill. And since they have a team that's helping us, it's not as dependent upon if we hired an analyst and they left. Now what do we do? Who's going to fill into those shoes? So I think really building out a good group of partners has aided us and allowed us to scale our operations.
It's interesting. So we'll come back to Solovis, but a limited number of people have gone from an endowment having one client to an OCIO platform. What do you think's the biggest difference between those two structures?
Initially, just the compliance aspect in terms of you are just in-house, you've got one client, you're reporting to their needs, to now Verger, we had to build out our compliance roles. We had to add client service. We had to add more operations specific to Verger versus at the university, we could borrow from the finance and accounting teams. But I think one of the biggest differences is that when you're having to cater to multiple audiences, and it's not just, hey, we know the investment committee, we know what they're going to ask. Now we're catering to multiple investment committees with expertise that is on a wide range, from the people who are in the industry who ask really, really good questions to those who are not as sophisticated that are really just trying to understand how we're accomplishing their goals and how we're investing their money. So there's definitely an educational piece as well. So bringing people along to help them understand what it means to be in a private equity fund, what it means to be subject to some liquidity constraints that they're not used to from their prior life in a 60/40 all liquid portfolio. So I think definitely catering to multiple audiences, having the infrastructure in place to cater to multiple audiences, and having that flexibility built in to help you navigate what those questions are going to be, as well as implement potentially a permanent solution to make sure that you're able to answer these in the future as well.
That's good stuff. And then how did you think about your tech stack through that evolution?
We had to look at our tech stack, and while supporting what the investment team was utilizing to make decisions from a portfolio standpoint, now that we're servicing more clients, we needed to look outside of that realm. Something that allowed the flexibility to do an analysis, comparing, contrasting, combining these very different portfolios is something that we needed to find. And one of the most important things that we were looking for is something that had flexibility, but also that could handle this client reporting aspect. When we were just servicing one client, we didn't really have to be too concerned with, because it was repeat and update. And occasionally we handled a one-off question here or there, but we needed something that we could scale, something that was flexible, and something that could help us get this information out quickly and efficiently to our investors to meet reporting deadlines.
So when you had a number of different clients, where did your custodian meet the need? And then where did you feel as though you needed to scale?
All investors with Verger have some investment in Verger Capital Fund. So reporting on that was not difficult. This was one group of assets. Everyone has their piece of the pie. It was when they had a separately managed account with that our custodian couldn't handle both. Our custodians really just focus on Verger Capital Fund, and then we have brokerage accounts that house the separately managed accounts. And it was really the combination between the two. I mean, certainly you can put it in Excel and do performance calculations over periods to mesh it yourself, but that's not sustainable. That's probably not advisable from a risk standpoint. So we had solutions that worked for the separately managed accounts that could do performance really well, could do some analytics really well. But it was really the combination of how do we get an investor a combined look of their total portfolio that we're managing. So that's what led to the decision of we need to find a solution to help us here. And what we made work via Excel, via our custodian's performance system worked for a while, but it quickly became apparent that we needed something to help us along the way. And in searching for that, we found Solovis as a solution that provided this answer to the question. And the initial answer to the question was primarily focused on we need a push button solution that can get us reporting. We're going to come up with something that everyone's going to need, and we're going to push a button and reporting is done. Send it out. Really easy. We would also add in some commentary that wasn't necessarily in the push button solution, but the majority of what we wanted to push out was this time weighted return. We'll throw in some risk stats and everyone will get the same thing, and that works. And so Solovis was able to build that for us, but what we found out quickly was that we started answering one-off questions. And these one-off questions were like, hey, this is a pretty good idea. Should we implement this across all clients? There were also some requests that were, I want to see this in dollars versus percents. And so we quickly found that to service our clients, it would probably be better to break this standard. Everyone gets the same thing. We need some flexibility to work on the fly, to incorporate some of these one-offs real time versus having to go back and redevelop the push button solution. So the decision was definitely built off of this need to service and scale more than just what we were used to with one client.
You also talked about the push button solution. Tell me more about what you mean by that.
Obviously, there wasn't an actual push button, but it was the set it and forget it. It was, we're going to take a solution that's similar to what we see with some of the funds we work with, that everyone gets the same reporting, whether you're big, small, it doesn't matter. So it's just a set standard report that everyone would receive. And while the idea was a good one from an efficiency standpoint, that didn't really meet the level of client service we wanted to deliver to our investors. And so it was the level of engagement we wanted to have with our clients, with their boards, with their investment committees, as well as making sure that we're telling the story that resonates best with that client, really led to this realization that the standard set it and forget it push the button and everyone has the reports was not the solution that we wanted to have for us.
A lot of organizations are in an Excel environment. Everyone still uses Excel today, but was there one tipping point when somebody said, we need to find a better solution in order to tailor this to meet our clients' requirements?
I think the tipping point was really the amount of time and effort we were taking to go from, okay, we've allowed enough time to receive as many statements as we can. And so with the commingled portfolio, we're receiving statements all the time. Private investments, 45, 90 days plus, lagged. So we had to draw a line in the sand from a quarterly standpoint. This is going to be our drop dead date. And then the amount of time from we said we're done accepting statements to working through custodian, making sure we're updated to then getting it into a presentation was really just taking too long. And so the efficiency was not there. And it's not to say that we don't check things before we send them out today, but really, I think it was the amount of time it took from we've gathered the information. Now, how long does it take it to turn into a presentation? Really was the tipping point in the recognition that we needed to create some efficiencies here.
And what about taking on new clients? Clients typically do not show up with a load of cash. Are you partnering with other custodians or are you redirecting to your existing?
So the business school answer is it depends. And that's the answer to this question as well. We will certainly partner with a existing custodian if it makes sense. We certainly have custodians that we work with that we prefer to work with, but we allow the individual investor to make that decision whether they want to pick up and leave from their current custodian to one of our preferred, or we'll work with them. And I think one thing that we're allowed to do via the flexibility of Solovis is as long as we can get data in a certain format, we can onboard a new client as well as pull in their historical performance and load it into the system so that they can see a longer term picture of their performance. And that's something that I think our clients have found very valuable, that there's not this, okay, we made a decision to move on and now our performance stream has to start over. As long as we receive good data and we have some presentations to kind of help match up to make sure that it's jiving and work with the Solovis team to make sure that it all works. I mean, we can offer this as a solution from an onboarding standpoint.
At the end of the day, this is about the investment committee process, and you have different stakeholders, different committees. How much tailoring do you need to provide to your clients? And maybe to back up to say, do you have an example where you're trying to model what their existing performance book is looking, or are you providing more, here's the version that Verger is providing? How does that look to you?
Our approach to this is somewhat a meet in the middle. There is a way that, and I'll use one client as an example, they have this annual roll forward that they have used from prior providers that really is just a dollar amount, beginning, contributions, withdrawals, investment return, ending. And they really like this annual roll forward to be included in their quarterly package. And so we took a look at it and said, all right, we have the data, but this isn't something that we necessarily think that all investors would want to see it this way or use it this way. But this is a pretty easy, we can do this. Now, from the standpoint of time-weighted returns and consolidated dashboard that we provide to investors that show all portfolios being managed by Verger, that's pretty set. So in terms of, we're going to show your Verger Capital Fund investment, your separately managed account, and if you have legacy assets, that's pretty set. How we present the performance of Verger Capital Fund is set. Everyone has their different views on asset allocation, but we're going to show it in the 4 buckets that we've prescribed. But I think where we customize is outside of that in terms of, do you want to see your asset allocation of just Verger Capital Fund and your separately managed account, or do you want to see it together? And so one thing that we were able to do based on a client request was they wanted to see their Verger Capital Fund investment as well as their separately managed account combined. And this was a bit of a challenge that we relied upon Solovis to help us figure out, because in system, our 1% investor is not showing in system as 1% of all of our investments. It's all the investments. So they helped come up with a solution that pulls it down into Excel, runs some macros to do the math. It's relatively simple, but it's not something you want to be doing on a quarterly basis when deadlines are tight and you're trying to get reports out the door. So working with them on this customized solution to meet this client's requests on the reporting side certainly has afforded us the flexibility to meet this one-off request from a client that isn't necessarily everyone's request. But in meeting that, it's built the foundation that we could use it for the next person who says, I really want to see this as a combined asset allocation versus just the individual portfolio.
What other unique client requests are you getting?
Certainly, requests are typically, investment committee focused, talking about the portfolio, talking about opportunities. But, occasionally a smaller client may say, we understand that you're servicing Wake Forest University. Can you help us understand how they approach fundraising or running a capital campaign? And so we have these resources within our client pool that can help some of the others. And so we connect these individuals in these positions that aren't necessarily our typical, hey, we're talking to you about our quarterly performance, but this can help this entity be successful in the future. This can help grow their mission. Absolutely, we will connect those. While related to investments, aren't necessarily on the day-to-day decisions of let's make a change in the portfolio or things of that nature, but are on the fringes of the better they fundraise, the more assets they'll have, and the better their institution will be prepared for the future.
What about on-the-fly requests for stats? Anything going on there?
Over the past, I'd call it 9 to 12 months, increased the amount of data that we're incorporating into our Solovis system, which we view as our one source of data so that our operations team as well as our investment team are working from the same source of data. Before we centralized this data, while we were saying we were still working from the same general sense of information, if one team's pulling something into Excel and this is an update that's in another file, we're getting two different results. So in pulling everything into Solovis from a data standpoint, this means using their public analyst services to pull in exposure data for the public side of our portfolio. We're also pulling in information from our Burgess private eye. So we're pulling in all this exposure data. And the reason I mention this is that these things were happening before, but were at a high level and weren't necessarily real time. And so by partnering with these firms to get this information real time or real time plus 2 days, we now have this basis of information within Solovis that we can go to on an ad hoc basis. And this has allowed us to meet these ad hoc requests almost real time versus saying, you know what, we'd love to answer your question, but we got to close the month. We got to see where we end up and then get back to you on it. But by building this all in one source, it's enabled us to meet these requests quicker, as well as I would say more accurately, can address situations such as with the exposure, whether it's a geographical question or a sector question. And you hate to bring up the worst case scenarios, but Ukraine-Russian conflict, understanding what our exposure is. By having this data, we can point to the very specific holdings that may be at risk. Whereas before, our investment team was really good at understanding where it was, but in terms of pinpointing the exact exposure, that was going to take some time digging through some files or making a few phone calls. Now we have it at our fingertips to address situations like that.
That's a great segue into the concept of IBOR. And how do you think about what was like partnering with your investment team before bringing on Solovis and then after?
So we brought on Solovis primarily as a reporting tool. And initially it was, we want this push button solution. Then we realized we actually probably needed something more flexible. And once we realized the flexibility and having the ability to create ad hoc reports, requests, things of that nature, it really allowed us to see these additional benefits that we weren't necessarily seeking at first. But now that we have them, it's like, all right, how are we going to use these? We initially stuck with the accounting basis of reporting. We were matching our custodian, we were matching our administrator on reports. Lagged reports were reported in the period they were received. Everyone matched across custodian, admin, and Solovis. And in analyzing the portfolio internally as well as externally, we knew that these lagged reported valuations that we were receiving were not being paired up necessarily against the benchmark correctly. And certainly we did some lagged benchmarks, but not everything fit into the nice square box that we were looking for. So really making the change to IBOR was really one that was driven internally as well as externally. And this ability to really see the portfolio and how it performs through different market events or time periods was really important internally, but also from an external standpoint, it helps our clients as well as prospective clients. So when we report an RFP, we're able to not have to explain, hey, we're on an accounting basis. So really, there's some fluctuations here. We're able to report in the time period, which helps them make a better decision around exactly how we perform through different time periods and market environments.
And what about workflows? What's been the biggest change with your own internal workflows on getting something like this stood up in production?
What we've done through partnering with firms such as Solovis, as well as our administrators, where can we maximize efficiency and where can we use a service provider to be an extension of our team to allow us to focus on bigger picture, more value-driven effort on our side. So, example I point to is that as we've included the public analyst in gathering this data and putting it into the Solovis system on our behalf, that's freeing up capacity so that we can rethink some positions that we have here within the operations team to now focus on our RMS system that needs some help, or focusing more on the reconciliation of the data versus gathering input and then focusing on that. So I think really looking for efficiencies and leading on others outside of us within our core group of partners has led to more efficient outcomes as well as supporting these reporting needs.
And on that front, so if it's modifying the task at hand, does it change the type of person that you're hiring at Verger?
So as we're able to outsource some of these tasks, it has changed how we hire for certain roles. And that change has been intentional. And I think it goes back to our flat organization. From an operations team standpoint, I was able to make this decision and have the support of the firm very easily and say, this traditional position is no longer needed because we can outsource this to a team that isn't caught up in other firm priorities. This is their sole job. And so that enables us to rethink some of the positions. And certainly within operations, our most recent hire was a very different position than the one individual she was replacing.
What's next for Verger?
There's a lot on the horizon. From a reporting standpoint, I touched upon the exposure data that we're getting from our public portfolio, we're getting from our private portfolio. And so we're just in the final stages of getting this set up. So how we view that internally, how we support our investment team with reporting on a periodic basis to help them make decisions, as well as get them familiar with using this data in system, certainly is a next step. Also, with this data, it'll help us with manager oversight. So in terms of a quick analysis of if they say their exposure to China will never be greater than 10%, now that we have this data, very quick comparison. How can this enhanced set of data impact our valuation process in terms of seeing across different portfolios from a private standpoint, identifying this holding is consistent across 3 funds? Does this valuation match across all 3, but then also does it match the valuation policy that they have? And if not, should we start asking them some questions around the valuation? Having this tool and quick analysis to compare across funds will lead to more directed questions. So I think building that more prescribed attack of these type questions outside of what we're doing today, I think we allow to use our time more efficiently. From a firm standpoint, we're looking to grow our asset base. We're looking to onboard new clients. Certainly looking forward to celebrating 10 years as a firm as well. And as part of that, we're going to have an investor conference for our investors, but also some friends, what we call friends of Verger, as well as prospective clients, to really gather like-minded nonprofit entities, and not just to discuss Verger performance or things of that nature, but we're bringing in people to discuss governance as well as raising assets, capital campaigns, to generate this think tank, create connections within the nonprofit entities. We will talk performance. We are bringing in a few of our managers that we think present a unique angle or help them understand what's within Verger Capital Funds. That's certainly something that we are looking forward to and excited about hosting here in the coming weeks.
The power of community.
Absolutely.
Jeff, this has been really insightful and appreciate your time. I want to close with two questions. And one is, what advice would you give to an emerging manager from an operational perspective?
That's a great question. And I think certainly as we have grown Verger over the past 10 years, we have a lot of bumps and bruises along the way and lessons learned and things of that nature. But I think high level advice, making sure you have good partners from A to Z, from custodian to admin to legal to tax, audit, all of these partners that we've had, I think have been significant in making sure that we're staying within our lane. And also good partners from a technological standpoint need to make sure that they have good customer service to go along with it. I think that's led to some of our success as well, and would advocate for, just because a tech solution looks new, looks like it could provide a lot of advantages to you by making that switch or onboarding with them, without a good client service model that we've received via Solovis to help us think through, hey, how do we think of this? We think of this a little bit differently than how it's programmed in system. So how can we bend this? How can we use this to really meet our needs? Without that, I think that partnership or that relationship won't be as strong. And I'm a big fan of having a dedicated customer service person, but I realize that doesn't always scale. That would be one perspective. And then another would be, from our standpoint, don't be afraid to hire outside the industry. I'm not saying that all of our hires are outside of investment management, because obviously we have an investment team and we want people with experience there. But I think we've also seen some value created through people who didn't originate in the investment management industry, and the insight that they can provide from their prior experience, or just asking some really good questions and questioning why not consider doing something different. I think that would be my high level emerging managers operational recommendation.
And then what one book or other industry resource that you commonly refer to people?
That's a really good question as well. And outside of Capital Allocators podcast, I mean, that's a great resource right there. But I think I'd say more people focused. And so in the 10 years of growing Verger, and I've been here for 9.5 of those 10 years, really it's the relationships that have developed, whether it's us and one of our managers, us or one of our partners. I think it's really about the people. And I think it's really having a trusted set or trusted group of individuals you can go to with questions. And I've also seen and experienced that people are willing to share a lot more information than you may think on the surface. And so I think having the relationships and having the go-to in terms of, I have a question about XYZ. Well, I heard that this firm has gone through something like that. I bet that Scott will be willing to pick up the phone and walk me through this. And I think that's something that's really helped us in terms of having that partnership with managers or people within the industry are really willing to share information from an operational perspective. May not be the same case on the investment approach standpoint, but I think definitely from an operations standpoint, I think it's really the people. And I'd be more likely to point an individual to another person or to another entity versus, hey, read this book or go to this one source for the answer to your question.
That's a great highlight. So Jeff, thanks again for your time and for sharing the Verger story, especially related to your partnership with Solovis.
Scott, I really appreciate it. And thanks again.
Thanks for listening to the show. If you like what you heard, hop on our website at capitalallocators.com, where you can access past shows, join our mailing list, and sign up for premium content. Have a good one, and see you next time.